traders, and welcome to Price Action GPS. I'm the Market Surfer here at your morning report for June 28th, 2023. All right, everybody. There's a lot going on in the news. I'll bring a few things up, but right now we're going to look at today's economic calendar. Regardless of these numbers, there's a few things going on in the market that I want to talk about. So here's what we're looking at today. These will move the market slightly. I think the largest thing that they want to talk about, I rarely put other people's videos, especially from YouTube, but this guy's video is so good about this one specific topic that I'll put it in today's notes so you can watch it. But mainly, the liquidity drain source as expected. Bill levels surprisingly. See, here's when they have to refill the coffers of the Treasury. They want to sell, whether it's the bonds, the bills, they have to sell their debt, and everyone buys it. So according to this right here, basically 54% of that is coming from the overnight repo. Now, they're not finished the auctions yet, but at this current rate, he's figuring if 54% come from the overnight repo, and the rest come from bank deposits, meaning people's deposits on the banks. If the banks are forced to buy the debt, they will. And not that he says this, I'm saying they will because they're kind of in cahoots together. It's the reason why banks get bailed out. They don't get bailed out because it's better for the blue-collar working class people. They get bailed out because they need someone to buy their debt. And if the banks aren't there to buy their debt, how can they print more money? So if you ever wonder why they bail banks out, that's why. Because they have so much debt. We are in a debt-driven economy. So if they don't have debt, if no one purchases the debt, they can't print the money. So now it comes down to who's buying the debt. Now, China and Japan aren't necessarily buying the debt. It's our own Social Security, pension funds, and now bank deposits. So if this goes sideways, this is ugly, very ugly. And if the banks have to come up with 50% of this money, then how tough do you think their lending standards are going to be? There's only so much money left. So if there's only so much money circulating, the banks are going to win because they need it. So that way they can purchase more debt from the Treasury. So this isn't looking too good. I was honestly hoping to see some type of off-ramp like Bitcoin or the Fed now. I don't know how this is going to work, but as these instruments start coming out and the economy starts changing, I guess, to truly a digital asset class, this is going to wreak havoc. To be honest with you, demographically, we're past the point where the younger generations, the X, the Y, and the Z should be enough in the working class to prop up the market through 401ks and pensions, and disposable income. A lot of the younger generations are spending a lot of money on eating, taking out, or take out foods. So the idea that the consumer is there, but we're just taxed so much and the economy is in such bad shape, I think they need to clear this out. So unfortunately, this isn't going to happen over a 2 or 3 year period. I think we're looking at 7 to 10 years of volatility in the market or restructuring. I don't know how they're going to put it, but the window that I thought could happen where things could transition in a relatively quick fashion, I think that time frame's gone. I think the summer is going to be it, but excuse me. I'm more worried about this right here, where the money's coming from, how little money there is left floating around, and how that will affect the regular consumer. So with that being said, we will go on to the charts now. Sorry. That was a little long-winded. All right, Bitcoin. We're still struggling to poke up and take out that top at 32. But I think that's our top. I mean, it can go on for a couple weeks, but then we roll over. And if we hold above the 19,850, then I say we're going back up. But if we break that, I mean, that it could still hold at 17, but my concern is under this. There's really nothing to 14. Dollar index is sideways. I mean, that pattern right there looks good to try to ride it up. Honestly, I'm really not trying to trade anything until I figure out what's going on. Just trading when I'm already watching and following. So I still think this is going to roll over and get down to the 116, and that's the bottom. From that, this will ride back up to 145. Tether's still sitting there. Triple top here in the U.S. or the euro dollar. And we can get to that, but that triple top, the way it looks right now, even on the 4 hour, that looks like it may fail. That's a nice short pattern right there, even though we didn't get to that top. And if that rolls over, I don't know if we're obviously the moving averages in this one are 1.07 mark. This right here is consolidation to be support. If it doesn't, trend line. If the trend line doesn't hold, we're going down here. Woof. Talk about struggling to stay up. That 2 years holding. The pattern would suggest that we're running out of momentum. So 200 period moving average is pretty close to that bottom, and that bottom. So somewhere around here, we get a pause. Let's go see what the other markets are doing. Oh, sorry. I think I just X'd out one of my charts. So, yeah, that 2 years should roll over. Trying to get the app harvest. I think my internet just at 4 in the morning decided to move real slow. Apollo Group, man, this is excuse me. This is really stretching out there. It could obviously take that out. But I would say we're at a topping pattern. I didn't expect this. I was expecting I was honestly expecting it to fail below that resistance. And it blew right through that. So get a failure here, see how that holds. When's their earnings? I don't think their earnings are going to be good. I think the debt crisis will hit them before the earnings even happen. So this could blow up in the next few weeks before earnings even get here. Regional banking ETF, it's still relatively flat. So is the move. This is looking interesting though. We're right at that bottom for the SDS, which is the ultra short S&P 500. I mean, they did their split here, which suggested that this is too cheap at the time. I think it was only like $7. So they needed it more expensive because it was too cheap. So they did a reverse split. We're back at that same level, I would say. I can't say price point because it was a different price, but we're at the same levels. See if we get a bump off of that. But everything would suggest that the momentum's to the downside. The dividend just got paid. So, Palantir. I'm waiting for that to come down on a retracement to see if it's going to continue to go up to try to ride it. With this rolling over like that, I expect to take this out. Home Depot had a nice bump there. All it did was close the gap. See, things will happen in the chart before major moves can happen, and closing gaps are one of them. Shift. Sean, this is still kicking. I mean, it's doubled the $1.10 than we were talking about. So it's already up $1. Warner Brothers, wait for that pattern to finish to the downside. Looks like that was the spot to get in. I mean, we're already at 142. So we have to wait for an opportunity if you weren't in down here. HBI finally got some push yesterday. That was a nice pattern at the end of the day, but this is only an hour chart. And to come back down, I'd still say we're coming down to here. I think they were just protecting that at the end of the day yesterday. But if we get down here, or anytime this rolls over and we get some nice, that right there was a nice entry. But on the hourly, we need follow it on the hourly and the 4 hour. The 4 hour to the daily is probably the chart that would tell you should start buying, but the entry points I try to find on the hour. All right. Other than that, Starbucks looks like it's topping out, waiting for that to roll over because they should get hit pretty hard. Because when people were going to, pull back on their spending, the crowd that I would see that happening with the most is the tech crowd, which probably shops at Starbucks a lot. So I would expect this to start feeling the pain of our consumer credit crunch and the money issues. Start feeling the pain of it and start rolling down. We do have dividends coming up, so that should push the price down. I don't know if that's going to have anything to do with it or not. But with that being said, everyone, this is a value for value endeavor. Value how you deem value. Time, talent, or treasure, as the Podfather would say. Thumbs up, comments back. Just let us know what we're doing. I see the few views that we have. I appreciate it. It's really only up for you guys, friends and family, obviously. But give us some feedback. I love doing this. I do it every day, regardless if I do these videos or not. So thank everyone for their support and their courage. And everyone have a wonderful day. Stay safe and effective. And enjoy your day.